Good afternoon. We're going to take just a minute and let folks get in, and then we'll get started. We have a long workshop today, and it's late, so I will go ahead and get started. I don't want to keep you late. Today's workshop is on the 2021 winter consolidated application submission. And this is going to be a page-by-page walkthrough of the pages required for the submission. We'll also briefly review some of the basics of the system that's used to submit the application, and we'll also discuss some of the requirements that are underlying the submission rules. So that's what you're in for today. My predecessor always told me you should start this workshop with a joke because there is nothing funny in the rest of the slides. Unfortunately, I don't have one. So hopefully think of something pleasant for a minute, and because this is going to take a lot of your it's a lot of detail. So first of all, there are links in the chat for the handouts, and you can access those on our website. And it includes the slides and one other handout that's up there. And also you should have received an email earlier today with a link that's also in the chat to the Consolidated Application website, where you can find the instructions and the guidance and other documents you might need. So the instructions would be particularly helpful for you. So those are there. We are recording the session, and we will post that recording as soon as possible, as soon as we can get it up. And joining me today behind the scenes here are Adrienne Balcazar, Jeannie Keith, Debbie Cano, and Rachel Garcia, and two new coordinators we have joining our unit, Helen Choi and Anita Lomali. So they will be supporting us, and we'll be gathering questions through the chat. So please put your questions in the chat. We will stop periodically to take some of those questions. Anything we can't answer, we'll get back out to you in writing, but I know you're all busily working on your applications right now, so we want to answer your questions as soon as possible. So I'm going to start out with what is this? And this is the first part will be particularly for some of you who are new. It'll be old news for some of you who have done this a number of times. But the consolidated application is really a companion document to a couple other documents. And one is called the LEA plan, which we call the LCAP Federal Addendum. Some of you were around when that was submitted a few years ago to the California Department of Education. And when you look at your allocations in the fiscal website, on CDE's website, you're going to see two columns. And one is for the consolidated application, and the other is for your LCAP federal addendum. And both of those have to be submitted in order for funds to flow to the district. So that's why they're considered two companion documents. The CONAP's primarily a fiscal reporting document, and the addendum, the LCAP federal addendum, is primarily a narrative description of your program. So that's why the two of them work together. And although the CONAP includes much fiscal reporting, it's based on program decisions. So it's important for program and fiscal to be working together, because some of those decisions that are made, obviously they end up on the fiscal side and have to be reported. So this is primarily a federal now, federal ESSA funds, Every Student Succeeds Act. Those are primarily the funds that are the only funds in the CONAP right now. Currently, there are no state funds included. State funds were pulled out when we went to LCFF, and categorical programs were essentially removed. from the state level. So it's possible that in the future you might see some state funds included, but for now it's only federal funds included in this reporting. So next slide is just a little vocabulary I always like to clear up. There's what is the difference? We call the consolidated application. Those of you who work on it affectionately call it the CONAP, and that is the actual application for federal funding. And it is both required, both the LEA plan and the CONAP are required as conditions of funding. CARS, or the Consolidated Application Reporting System, refers to the system that's used to collect and report the data. So there's the application and the CARS system. People sometimes use those terms interchangeably, but that's kind of what the difference is. So the next slide shows that there are two submissions. And the first is in the spring. So if you were working in your district last spring, you probably submitted the spring submission to the application. You need to keep this in mind. It's one application, but in two parts. So in June of each year, last year, it was actually delayed until July. But typically by June 30th, LEAs apply for the funds. They apply for federal ESSA funds. And that's why you need board approval in the spring. So board approval for this CONAP is only required for the spring submission. It is not required for this submission. However, in some cases, districts like to take it back to board, or boards like to see it because you see final funding amounts in the winter submission. So we've provided for you a board approval executive summary. We do that in the spring and we updated it. So posted with the slides on our website is a sample in a Word editable version that you can use to identify which programs you have and tailor it in any way you need. So just to know, though, it's not required for winter submission. So in the spring, you identify which funds you want to apply for, and you also agree to some legal assurances. So the district and the superintendent have to agree that they will abide by the various rules regarding the programs. It also includes some year-end reporting and data collections, but that's pretty much what's in the spring submission. You're saying, I want to apply for these funds, and providing some assurances and also indicating which private schools will participate. All right. The next slide is the winter submission, and that's where we are now. And if you personally didn't complete the spring submission, you might want to go back and take a look at it, because there are a few pages in the spring submission that impact the winter submission. So it's helpful to see what was reported in the spring. Again, board approval only required for spring, and a board update is optional in the winter submission. And this submission includes reporting requirements based on a number of decisions that you made in the spring submission. So sometimes a decision you make in one report comes out in a report in the second submission. So in some cases, you're reporting information that it looks like this is when you're making those decisions, and that's not the case at all. The decision should have been made at the beginning of the school year. Now you're reporting on them, but it does kind of feel like your school allocations. Schools should know what their allocations are. It's more than halfway through the year, but you're reporting on them now. So you'll see that play out in a few ways. So it includes some closeout reports, some Title II, and particularly Title III have multi-year expenditure reports. Title I school allocations, there's a carryover calculation, and then reservations for your Title I programs and identifying school-wide programs. So this year, usually it's due on February 28th, but this year it was extended to March 11th. So you have a little more time to complete the application. So if you're looking for where to go for help, first of all, there are 2 pages. There's a CARS web page, and that's helpful if you're new to the system and you haven't used the system previously. There's a section on there, Navigating CARS Webinar. It is even more boring than this is because it goes step by step as to how you go through it, but it's really good. So if you haven't used the system before, and you can always fast forward it, and you can go to those sections. I you particularly want to know about a certain page, it's a very helpful webinar. There's a CARS user guide in there that talks about the system uses, and you'll see it's a rather old, it's I think 2015 maybe, and that's because the system's been very stable over those years. And then you'll find the ConApp support desk, which is where you can go for help and questions. You'll also see their program and fiscal people that you can go to. We'll talk about that a little more later. All right, so changes. This year, there are a lot of changes and particularly additions, and primarily because of the federal waivers we've had that have extended the period of availability and some of the carryover requirements. So this year, you have more reports than usual. The reports go back as far as 2018. So you have 2018, which are 39-month reports, which are unusual. So that's new. You have some close-up reports because they extended the period of availability for various funds. And then there are a number of expenditure reports that wouldn't typically be submitted. Again, these all have to do with the extension of the timeline. The Title I carryover waiver, again, that's typically you can apply for a waiver for once more than every 3 years, and now you can in this submission again this year, so that's new. And some Title IV pages were moved over to this submission, and the Title II, now they have the closeout report that typically would be in this is not included. So a number of changes, and we'll go into them in detail. But how do you get started to get connected, to get into the system? Hopefully you're in already. But first thing we always suggest is that you sign up for the ConApp listserv. Make sure you're getting emails. If anything happens, if the system goes down or there are problems, you want to be on that email list. Secondly, to enter the system, everyone in your office who's working on the application needs to be registered in the centralized authenticating system to begin with, and you can access that from the ConApp web page. And there's detailed information in the user guide to help you if you haven't registered before. And we'll take a little closer look at that in the next slide. So this is the ConApp page, and you have to register in the centralized authenticating system first, which gives you a password and a username. Then you're going to click into the CARS system using that password and a username. So, and if your password, you'll get a message if your password hasn't been updated, and they'll give you instructions how to do that. But hopefully you're all in there now. So that hopefully is not an issue. When you enter the system in your particular LEA, the system is going to show you a list of current reports, and these are specific to your LEA. So you're going to see some reports that we addressed today, and you may say, well, I didn't see that one in my system, and that would be because it doesn't apply to you in most cases because you didn't apply for the funding, or you're not receiving a particular funding source, or didn't in a particular year. But only what pops up. This is the page that shows you what you have to, the tabs that you have to address. Okay. And to print a document, you're going to go over, you see the tabs at the top. If you want to print one of those pages, you're going to go to the reports page, and that's where you can print anything from. All right, so as you enter it on the next page, let's take a look at how you should enter it. The data collections, there's something called a data dependency that's an important term to know as you're working on the application. Sometimes you find you're very frustrated in something. You think you're doing everything right and nothing's working, and sometimes it has to do with this thing called a data dependency, because what you do on one page is pops over in some cases to another page, and so you can't correct it until you go back to the previous page. So therefore, it's recommended that you complete the data collections in the order that they're listed on your form. And some data collections are data dependent, and you just can't complete them before you go to the prior page. Sometimes you can do them out of order, but just to be safe, it makes sense to go down the page, hit save when you complete the page. If you go back to a previously certified change and recertify it, you also may need to make changes on the pages that are dependent. So if you make a change on one page and you know you put data on another page, those two pages talk to each other. So you're going to have to go back. So sometimes that's the cause of your frustration, is a data dependency. Right? And you can work from the home screen or from the data entry screen as you're entering. Right. As you work on it, you'll see one of these status indicators will come up. If it says none, that means nothing started on that, because sometimes there are multiple people working on the application. You have fiscal people, program people, from different programs. So you know that no one has started on a particular page if it says none. If it says draft, you know something's been started in there, but it hasn't been completed. If it's certified, you know that someone has finished it and certified that page should be complete. Certified obsolete means just what we were talking about. It means that a data-dependent change, a data-dependent page has changed. So you certified it, everything looked great, and then you went and did something on another page, and now that's showing up as certified obsolete. That's your clue to go back and say, something I did on that other page is impacting that, and it's no longer acceptable. All right, so some terms you'll see as we're talking today. Displayed data. This is data that is calculated. It could be within a data collection, or it could come from another data collection. It's something, basically, it's put in there by CDE, or it's calculated from numbers that are put in there automatically. And usually, if it's from an outside source, it can't be edited. Things like your allocations they're displayed, and you can't change them. Pre-populated data, again, data that's brought forward from another collection, and that data dependency we've already talked about. Pre-populated data has to be changed in two different forms. So some important terms that might pop up. Certifying the reports, you can certify either after each report, or you can certify them all at once at the end. It's up to you, whichever way you want to go. So it doesn't matter. You can certify after you finish a page, or you can leave it open and just go through and certify all of them. All right, the next is some scary terms, right? You're going to find two types of messages that may pop up. One is a warning, and a warning message means that the data parameters are not met, or a business rule wasn't followed, or a certification dependency exists. So warnings are usually included under, when you go in the instructions, you'll see a list of error messages, and in some cases it will say warning. And that means it's not an error, it's a warning that something appears to be wrong. And then the CDE uses a term called warning warnings, and those are really, something is really wrong, and you really need to fix it. But they're still going to let you certify it with a warning. So an error is different. An error does not allow you to certify. So an error, when you're getting an error message, you know that something is wrong, that you can't submit the page. So warning means you should always know what the reason is for the warning. If you don't know, there might be a problem you're not aware of, and it's going to come back to haunt you because you'll get a call from CDE on it. So if you see a warning message, sometimes you'll say, yeah, I know what the issue is, and it's okay. And you're willing to override that. An error won't allow you to override it. So just know those are two different kinds of messages you'll get. Some pages have comment boxes. There seem to be fewer and fewer, but some of the data entry pages, if there's a comment box, if you get a warning and there is a comment box, that's a good place to make a note as to why what you're putting in is acceptable. So kind of shows, I know what's going on here. Here's the reason. So if you get a warning, you should put that. But for this year, it appears mostly it's only the Title I carryover that has comment boxes. But if you see them, they are useful to communicate to CDE. Next are the user roles, and just a brief look at the different roles and permissions. And this is from the CARS user guide. And again, it's a very helpful document if you have trouble with the system. But there are different roles that you are assigned, and you may be the person who's assigning these roles, or you may be in one of these roles. The LEA authorized representative is generally the superintendent or designee, and that's the role assigned to the person who's able to certify the data collection, including the assurances in the spring submission. So this is sort of the official person, and often that the superintendent will designate someone for that role. The next slide is the data entry representative, and that is the person who's that's likely in a larger district going to have multiple people who will be doing data entry, and they're the users who can add information, they can edit it, you can save it, so they have a lot of ability to work within the system. So if you're the person assigning roles, then you need to know that who needs to have that role. They need to have access to it, they can download, they can edit, they can work on the page. The next one is called LEA General Staff, and sometimes there's people in your organization or outside your organization, like consultants or us, county office people, that are there to help you and support you. We can't see into your system without being in one of these roles, and the place to assign us is the general staff role. That means we can't touch anything, we can't do anything to the data, we can only view it, but sometimes that's helpful if you have someone supporting you. And then the final role is the LEA user administrator, and that's basically the person who assigns the roles to others. So that person has overall authority to assign various people. So you need to know who needs to do what so you can assign them. All users have to be registered in the CARS system. Okay? All right, and this is how you get to the Consolidated Application webpage. You go to Finance and Grants. You'll see Consolidated Application will pop up there. This is from the CDE website. And that will take you to the next slide, which is the CARS webpage. And it's just, or the ConApp webpage, sorry. And this is where you'll find a lot of resources and information. You find instructions, you find guidance, you'll find places to go for help. The key document for you is are the instructions, and you'll find those listed in the middle there under the What's New section. And you're looking for the most current instructions. So they're the ConApp. The first is the guidance, and the second link is to the instructions. So let's go to the next slide and take a look at the guidance. Is kind of general program information on a few specific programs. So it's more general in nature, gives you some background information. The ConApp instructions are what you'll find you use most, and they're available in two formats, and you can use whichever is convenient for you. They're available in a document that you can download. So if you want to pull that document down and use a copy, you can have that. Or they're in an online system, and if you use that system, then you just can go to the page you want, click on it, and the instructions will pop up. The instructions provide a step-by-step guide. If you haven't submitted it before, and even if you have, the instructions are like something you need to keep right beside you when you're working on it. They tell you what needs to be entered in each section specifically, and they also will provide you with a correction for what needs to happen if you get an error message or you get a warning message. They'll tell you what the problem is. So if you're not sure, go to that. It's right there. It'll tell you what the problem is, what you need to do to fix it. And there are also a link to the legal assurances that were submitted in the spring of this year. Okay. A couple other links on the next page are the news flash updates. There's not much there now, but if anything happens, they post news flash updates. And then there's a data collection release schedule if you want to see all the collections throughout the year, what was submitted in the spring, what's submitted this time. You can see a whole list of those there. All right. And a couple other additional links that might be helpful, and they're listed on this page. One's called Program Profiles. If you're not sure, they're there for all sorts of programs beyond the CONAP programs, but Program Profiles are summaries of state and federal categorical programs, and they'll tell you what the funding is, what the requirements are to apply for the grant, what the purpose of it is. So those are kind of handy if you have questions about a particular grant. These are probably all pretty familiar to you, but can be useful for grants you're not familiar with. Also, it gives you CDE program contacts and a place to for the email list. I'll say it probably later, but don't want to forget the program contacts. You're going to find fiscal and program contacts. In the instructions on each page, it'll tell you who the program contact is, and in many cases, who a fiscal contact is. So you need to know, what is your question pertaining to? Is it a fiscal related question? Then go to the fiscal person. If it's a programmatic question, like what are the rules, what can I do, that's a program question. If it's a question about the system, then you want to go to the CONAP support desk. So there's lots of places to go for help at CDE, but it helps to know where you need to go for which particular question. Now, we mentioned legal assurances. Okay, so we're not going to go into those, but just a reminder, in the spring, your superintendent agreed to a lot of rules and requirements, and they said, yes, I will follow all these rules, and those are included in the legal assurances. So you can find those assurances from the link on the main page from the CONAP, and you can go in, and if you want to look at any of them just to make sure you're familiar with them and you know what you agreed to, that's worth taking a look at. And on the next slide, we'll show you a sample of one that often is a problem, and that's frequently overlooked. It's one that it applies to all ESSA formula grant programs, so all the titles, and it essentially says there needs to be board adopted criteria for evaluating the effectiveness of your programs, and an annual evaluation showing that programs meet that criteria. So that's just one of the things that's sort of buried in those assurances, and many districts find that when they have an FPM review that this isn't taking place. So you need to check it out. Has your board established that criteria? Where's it found? What's the process for determining if programs have met that criteria? So again, this is why it makes those assurances a good read. All right. And another thing to remember is documentation. You need to keep a printed copy of the CONAP, keep it on file, and particularly there's a certification of assurances that was signed in the spring, and you need to check and make sure that that is somewhere in your office, because if you're reviewed, they would likely ask for you to show documentation that that was actually signed with an ink signature. All right, we mentioned this is a page where you find the legal assurances. It's with the request for applications link, so that's just where to find those. And the next page, just a lot more links. You can see there's everything. That's the centralized authenticating system. That's where you go to register if you're brand new, the CARS login, where you go to get in, and the release schedule. Okay. Training documents, again, and you can just kind of you look through these. The user guide, again, that's for using CARS. And the next page is if one of your schools has changed configurations, or you have a new school, you will need to go into this link, and it's for the online public school update, and you need to update your school there before it will show up in the CONAP. So if you have a missing school that's maybe new, it may not have been registered in this system, so you'll need to do that. All right, so that's enough stuff to get you started, enough resources. Let's get started by looking at the submission. So we're going to start with looking at what's in it. Again, winter submission on the next slide. We have 1819 expenditure reports, 1920 expenditure and closeout reports. The next slide goes into 2021, which is last year, and you're reporting carryover, you're reporting your expenditures, and for Title IV, you're reporting your use of funds. And then finally, you get to what's the biggest one, and that's the 21-22, and you'll see the next two slides address all the things that are in the 21-22 report. So it's really a significant report, and we'll go through each of those in depth. Okay, there's another one. So lots of reports in 2021. As I said, this is probably one of the longer ones you've had. So we'll start by looking at 1819. All right. And typically these funds you would not be reporting on. However, because they would have expired in 2020. However, the federal flexibility waiver extended the timeline for these 1819 funds. And so for some LEAs, you may still have some remaining 1819 funds. If you don't, that's great. But if you still have some remaining, you're going to have to fill out these reports. So let's take a look at how that happened. Federal funds are available to LEAs for 27 months. Okay? So essentially, they are obligated, and the Congress is supposed to have them out in October. They arrive at the district in July 1, you officially, I know we don't always have those numbers, but officially you can start spending the funds July 1, and they're available for 27 months. That means you have them from July 1 to July 1, that's 12 months. And then you have them for another year because of something called the Tidings Amendment. And then you have them for an additional 3 months because of the federal timeline, because federal funds expire on September 30th, as opposed to state funds, which are on a July 1 to June 30th timeline. So that's how you get the extra 3 months. So that takes you to 27 months. So how did we get to 39? Well, we got a 1-year extension on those 1819 funds. So that takes you to 39 months. So that's why you have an extra data collection this year. And the next slide just kind of shows that how that works. If you want to look, funds are appropriate in October, they get to the district in July. The initial period of availability ends September 30th of the following year. You get 1 extra year plus 3 months with the federal timeline. But for these funds, you got an additional year. But that means they closed out last September 30th. Okay. So typically they would have closed out, as we said, but these were now closed out as of September 30th, and any unobligated funds would have had to be paid back, but California applied for the flexibility waiver, so it gave you till September 2021 to spend them. And the next slide just gives you an update on the waiver. It was April 21st, 2020 that the waiver came through for the 1819 funds and allowed you to carry those funds over for an additional year. And then the next slide shows you the next waiver, which we'll talk about in a little bit, and that was for 1920. And 1920, another waiver extension was approved for 1920 funds. But as you can see, the waiver came through not until September 30th. I'm sorry, September 10th. And the funds expired September 30th. So there was a lot of nail biting going on about those funds. So the message is don't wait to spend the funds because you don't want to be in that place of wondering with a few weeks to go if you're going to lose the funds or have to spend them. All right, so if you want to know how your funds, what your status is, you can go into the CDE website and see what they have posted. Now, this might not match what you have in your district because your fiscal office may not have reported them in the cash management system. but you can go into the CDE website and you'll see if your CONAP was submitted, it says CAR submission, if your federal addendum was submitted, and those two are required. Then it'll say what your allocation was for any given year, and you can go back multiple years, and how much was paid and how much is remaining. So you can see if CDE has a balance there, then you want to check with your fiscal office and say, is this matching? Are we not spending the money as I thought we were? Or how are we doing on spending our funds? So helpful place to know how to find out where you are in terms of what CDE has posted for your funding. So the first page is in the data collection is our expenditures, and these are 1819, and this is for Title II, so not all the funds are in there. So your reporting period is for the full period of the grant. You're reporting from July 1, 2018 through September 30th, 2021, and the displayed data is included there, and that includes your total allocation and the amount that was issued, because sometimes your initial allocation changed. And it also includes any transfers in or out. Under federal transferability, you can transfer funds. So back in 2018-19, if your district decided to transfer funds in or out of Title II, you'll see a number there. So that's what that is. You're going to report expenditures, and you'll notice as we go through the data collections that the expenditures are reported differently for different programs. So for this program, in this particular report, they're reporting it by allowable costs. So you're looking at those are the areas for where Title II could be spent. So that's how it's reported there. Indirect and administrative costs you'll see in this case are combined. That's not the case in all the reports, and we'll see some different ones coming up shortly. But for Title II, there is no cap on administrative costs, but there's a warning on that you'll get. So it's not an error, but it's a warning. If your administration, which includes admin and indirect costs, if both of those together exceed 15%, it'll be checked for what they call reasonableness. And we'll talk about that in a minute, but just know there's no legislative cap, but there is a warning on it. So this is one of those examples of something that it's not an error because you can do it, but you can exceed the 15%, but it's a warning because it's going to be questioned by CDE. All right. You're going to include any expenditures you had for equitable services, and if there's anything left at the bottom, those funds will be invoiced by CDE. So the idea is to get to zero on this page. Okay. All right, the next page is the Title III English Learner page. Okay, so for those of you who receive Title III immigrant funds, you will have two Title III reports wherever they appear. So for every year that you got the immigrant funds, there'll be an additional report. This particular report is for Title III English Learner funds. So there's two pots, and they trigger two different reports if you get both of them. So just be aware of that, and there are some slight differences in the reporting. The availability of these funds ended again last September 30th, and the report is for the full period of the grant. And you'll note this page includes the full grant amount, but it only includes funds transferred in. Title II had funds transferred in and out. This one only has funds transferred in, and that's because funds may not be transferred out of Title III. And you will notice a difference here on how the expenditures are reported. For Title II, they were categorized by allowable costs, but in this report, they're reported by object code. So, and an important note here is the error message. Notice this is not a warning message, this is an error message, because you have a maximum under ESSA, this was a change in ESSA, a maximum of 2% can be used for direct administrative costs for Title III EL programs. However, and this is a change from prior to ESSA, however, you can charge your full approved indirect cost rate. So it can be applied, and that's applied at the end of the year. And that's only applied to funds that are not reserved. So for administrative costs, so you have to pull out those administrative costs, the 2%, and the rest of it you can apply your full indirect cost rate to. Okay? And again, as with all the 2018 funds, CDE will invoice LEAs if there are any remaining funds as of September 30th, 2021. So again, our goal is 0 on this one. The next one is your Title III immigrant. As I said, it's similar reporting period, same reporting period. The displayed data, same thing. You can only transfer money into Title III immigrant programs. And while most of it you'll see is the same as the EL report, there is a difference. And you'll see in the pink box, it says warning message as opposed to an error message. And that's because there is no legislative cap on administrative costs for Title III immigrant funds as there is for Title III EL funds. And you'll see the change in the language in the instructions from that you cannot exceed 2% to you should not exceed 2%. One word makes a big difference. CDE applies this reasonableness standard again to this, which we're going to discuss again in just a minute, but they're going to question anything over 2%. So once again, it doesn't mean you can't do it, but it means you're going to be questioned, and we'll look at why that's going to be questioned. Once again, invoice for any additional funds. So we've been throwing a lot of terms around, and they're going to keep popping up in some of these reports. So it's important to understand the differences in some of these terms to make sense of some of these reports. So just briefly want to go over a few of them. And the first one has to do with administrative costs and what they might include. So administrative costs basically can be in two categories, and you've seen that in the reports. They can include direct program administration, or they can include indirect cost. And there's the difference between these two is key. And you can see some programs have a cap on one, some have a cap on both. So let's start with direct costs, because we're talking about direct administration, but let's talk first about what's a direct cost. So the definition comes from the Code of Federal Regulations, and as you can see on the slide, and it's not about the nature of the cost. Like you could say an instructional aid. Well, an instructional aid it depends on what they're doing and how it connects to the award. So what is that person doing, and is it supporting directly supporting the program? For some programs, a plan might be how you document that it's a direct cost. What does your plan say you're doing with those funds, and how does that cost directly support it? The fiscal office can't just assign costs based on the expenditure, because you have to know, are they directly supporting the program? So it takes program and fiscal to talk about that. And again, a direct cost shouldn't be confused with a direct service, because a direct cost can be a direct service, it's directly serving students, or it can be a direct administrative cost, that your job is directly supporting administration of a particular program. Okay. Direct services for students are easier to define, but direct administrative costs get a little bit more murky, because you have to, and just had a conversation today with the district looking at that, to what degree do employees directly support the program? Indirect costs, on the other hand, which you're all familiar with, are broader in nature. They're agency-wide general management costs, and they're not readily identifiable with a particular program or service. And rates are set by CDE, and they're set annually. Indirect costs are charged only at the end of the year. So when you budget for indirect costs, that's just a budget. And that may not be what you're going to charge. You only charge on what you actually spent. So an important requirement that comes out of federal regulations is an indirect cost cannot also be charged as a direct cost. So that's something to think about when do you know what your indirect costs are paying for? And you can't double dip. You can't say this is an indirect cost, whether it's things like telephones, lights, whatever it is, those are generally indirect costs, but you can't charge something as an indirect cost and then go and charge the same cost as a direct cost. Those rates are updated annually, and it's important to keep an eye on them because they can impact your budgeting in a lot of ways. Right. Administrative costs are generally considered either direct or indirect costs. So they're all administrative in nature, but under ESSA, and most federal programs have a cap on administrative costs, but how they define it is different. So some federal programs have a cap on direct administrative costs only, and you can charge your full indirect. You saw that with Title III. But other programs have a cap on administrative costs overall, and that would include direct and indirect costs. So adding the word direct administration made a big difference, and that was in the change in ESSA. So keep in mind, it's direct administration. And this to the next page is just kind of a graphic of how that looks. Whoops, no, it isn't. It's not that at all. Oh, that one's, I want to skip that one. This is a scary slide. So in recent updates of the Uniform Grants Guidance, they tightened the definition of administrative costs, and this is important for you to be aware of. So in that section, 200.413C, they say salaries of administrative or clerical staff should normally be treated as an indirect cost. And I said direct charging of these costs can only be appropriate if the following conditions are made. So they're saying typically administrative costs, particularly clerical staff, they should be indirect costs because it's hard to say they're directly working for a program. But if you have to demonstrate that the services of that employee are integral to the project or activity, that they're essential for that work, that they can specifically, that they specifically work with the project, that the costs are included in the budget, so you specifically tie that cost to the budget, and they're not also counted as an indirect cost. So I've just kind of raised the bar a little bit to make sure that administrative costs are clearly direct costs appropriate in supporting that program. All right, and this is, I think, what we're talking about. So an administrative cost can be overall, like Title I has a 15% administrative cost cap. That includes both direct administration and indirect costs. But Title III has a cap on direct administration, no cap other than your cost rate on indirect costs. So you'll see that in the reporting, and it can be a little confusing. Some examples, and we've already talked about Title I, you see 15% on both, and Title III EL has a cap 2% on direct administration only. And then you have some of those like Title II that have no cap. And so in that case, CDE uses what they call the reasonableness principle. And that comes on the next slide out of the Uniform Grants Guidance. There's something called Administrative Requirements Cost Principles, and these are the federal cost principles. And the federal cost principles set forth oversight requirements for federal grants, budget development review, and any kind of desk reviews and audits. So let's take a look. The factors affecting allowability include, on the next slide, the cost principles, and included in that is whether a cost is reasonable, necessary, and allocable. And all of those determine if if the cost can be applied. So to be necessary means it's necessary to support the program. And often that's because it's in a school plan or somewhere it shows we have to have this or we can't really implement the program. Is it reasonable is what we saw in the previous slides, that CDE checks for reasonableness, and this is what they base it on. And reasonable is a fiscal consideration. Is that a reasonable cost for that? And their reasoning would be that a cost, say, for Title II, if other similar programs like Title I have a 15% cap, then we would apply that same cap, that feels reasonable to us. So your job would be to make the argument for reasonableness if you charge above that. Okay? So that's where that reasonableness comes from. It's not just something somebody made up. It actually comes from federal requirements. And the next slide, there are a list of other requirements that show. This whole idea of being allocable, that means you can show how that money or that service supports that grant. Okay, so that's why you can allocate it to that grant. All right. Okay, and the others are not as applicable to this workshop. Okay. All right, so I think we already talked about the next slide, which is how reasonableness applies to caps. We said Title II, they use a 15%. Title III immigrant doesn't have a cap, but CDE recommends the same 2% that you have on EL programs. Again, their presumption is that these are like programs, that they're out of the same funding source, and so they go on the presumption that a 2% cap is reasonable. All right. Determining funding for program administration. This is when we said you need to check your indirect cost rate annually, because if your cap is based on both direct administration and indirect costs, if your indirect cost rate goes up significantly, you have an idea what that does to your money available for administration. So for those of you administering federal programs, you need to keep a cap on that, because if you go from a 6% indirect cost rate to a 12%, then and you have a 15% cap for the program, that really cuts you down on the amount you have left for administering the program. So just something you need to keep an eye on. All right, before we go into 1920, we'll move into next year, but I want to take a brief stop. And Adrian, any questions?
Hi, yes. Okay, so we have a question regarding, and this was earlier on, about the identification of school-wide programs. So if a school is going from targeted assistance program to school-wide, when do they indicate in the CONAP the school-wide and the date that the board approved it? Is that in the spring or the winter collection? And is it at the beginning or the end of the year-long process?
It is, that's in the 21-22 data collection, in this winter collection, and we're going to be touching on that page in a few minutes. So yes, It was in this data collection. This is where you report any school-wide programs and where you update that list. So that's a really good question. I always lose that. When does it come? It comes in this collection. So it'll be in 21-22.
Okay, great. Another question is, you had mentioned to go from top to bottom, and so a question was, can you go and do all the reporting for Title I for all of the 18, 19, 19, 20, 2021, and 21, 22, or do you need to do all the 18, 19 reporting first, then the 19, 20 all as a group? Does that make sense?
It makes sense. That's a really good question. And I'm trying to think, I can't think of any data dependencies that are outside of a particular program. So a data dependency for Title I would be another Title I program. So I don't see where that would be a problem. And, and just so you're aware of it, and if something goes haywire, oh, that's what happened. But I don't see that would be necessarily a problem if you're following a program in order. So do all your Title I reports in order. Because I off the top of my head, I can't think of any data dependency that would be from one program to another. So doesn't sound like that's a problem.
Great, thank you. And then the other two questions were asking for links to the indirect costs, which Rachel placed in the chat for everyone. And then also the link to the allocation and balances to find the current posted balances, a request for that link as well.
Okay.
That's it.
All right, let's march on to 1920. All right. Okay, 1920, and these are funds been available since July 1 of just to remind you, some of these are pretty old, right? These have been available since July 1, 2019, and they were scheduled to expire this September 2021, but the waiver extended these funds for additional years, so they'll be available till September 30th, 2022. And so don't get used to these waivers. They may stop anytime. In fact, we think they will. All right, so let's take a look. The first one is your 1920 21, and they're calling it a closeout report, even though you do have more time to spend those funds. So it shows your full allocation for that year. So whatever came in 1920, and it includes any funds that were transferred in that year, in the 1920 year. So if any funds were transferred through federal transferability, if they were transferred in, and they're showing there. In this report, they're also showing you any expenditures that you reported through September 30th, 2020. So that would have been in last winter's report, so your expenditures. And then it's going to show any remaining funds as carryover at that time, whatever you were carrying over last year. So you'll be entering any additional expense. So this one isn't one for the full grant. It's just any additional expenditures you had through September 30th of 2021. And then you'll need to hit the recalculate button, and you'll find the amount remaining funds that you have to spend by this coming September 30th, okay? So if on the next slide, if you didn't have any, you'll you at the top there, you'll see you'll get another report. Let's look, let's see, expenditures. Yeah, I think we hit everything on that. Okay, yeah, so this is what you're reporting. If you have nothing, you get, and I'm not sure those of you have it, you either get nothing or you don't have a report to do, but basically there's nothing for you to report if you didn't report carryover last year. All right, so wait a minute, that's a closeout. Okay. So the bottom of the page is your 1920 expenditures for Title I Part D. Most of you can ignore this. These are mostly county office programs, but for you county office or LAUSD folks out there, the expenditures are reported for the full period of the grant. And again, they're going to use that reasonableness for a standard at 15%. So it's not an error message. It's a warning if you exceed 15%. And the LEA is going to be invoiced for these funds. So apparently Title I Part D did not come under the waiver extension of the period of timeline. Sorry, Part D folks, okay? All right, next page is your Title III. We're back to Title III again in 1920. It goes faster because it starts getting a little repetitive here. 1920 is your Title III 1920 EL expenditure report. It covers the period from July 1st, 2019 all the way to September 30th, 2021. And the data provided for CDE by CDE is the total allocations. And again, displayed data includes any transfers in the 1920 year. You know, for Title III, you can't transfer out, only in. The same administrative cost restrictions apply for Title III EL. Again, you're going to get an error message if you exceed 2% on your direct admin. And when you recalculate, again, you'll get the amount there at the bottom that you have to spend by this coming September. So you need to watch that money and make sure it gets out the door by September 30th. And then if you received Title III immigrant funds, sometimes you go up and down because it's like an annual number thing. So people go in and out of immigrants. So you could have them one year and not another. But if you received Title III immigrant funds in 1920, this report will appear. If you didn't receive it, the report won't even appear on your screen, so you don't have to worry about it. But as in the last report, you're reporting the full period of the grant through September 30th of last year. And it's a warning message. You can certify it if you exceed 2%, but you might get a phone call from CDE, so be prepared. And the final amount, at the bottom, you'll get a final amount, and you've got to spend that by September 30th of this year, 2022. So now's a good time to take a look at how to make sure you get your money spent, because you're seeing a lot of this money coming due or past due, and sometimes you've gotten a lot of money in the last few years, right? And so some of this money has kind of gotten put in the background and not spent. So how do you determine if funds are spent? And what we're looking at, this is out of the Education Department General Administrative Regulations, and it's the source for determining the timelines for what we call an obligation. We just say the word spent, but an obligation is a little bit, is a more technical term. And so obligations are orders placed for property, services, contracts. And the following charts from Edgar are extremely helpful. And when you get, especially when you get close to the end of the year and you have money that needs to be spent, you want to know what you can count. So if we look at the next chart, it's actually from the Department of Education regulations, and it tells you if it depends. Okay, what the money is being spent for. So if the obligation is for a particular service or product, then when the obligation is made may differ. So for employees, for example, when they're paid at the time the services are performed. So sometimes their paycheck comes later, but the obligation can be counted for that time. Whereas a contractor, their service, it's on the date that they make a binding written commitment or the date the services are received. But you can see you have a little wiggle room in that if you have a contract that says you owe them that, they're going to have that service, it's a binding contract, then you can count that as an obligation. One of the ones we haven't had to deal with recently, but it used to be an interesting one, is travel. And because travel, you pay for your travel ahead of time, your tickets and everything, but you can't count the travel as obligated until it's taken. So if you have people going on conferences, that money, you can't count it until they've already taken, the travel's been completed. So that is that's a challenging one sometimes. I think there's more on the next page. And acquisition of supplies and equipment, that's similar to a contract. So if you have a date, a grant, an order from the vendor, if you have something that verifies that the property is there, that you're obligated to purchase it, that contract for those supplies and services, or that invoice, whatever, serves as an obligation. Or on the date you have a binding commitment for the property. So this is just kind of a handy dandy cheat sheet when you're like, oh, can I count that or not as an obligation by that date? And the following page from CSAM, California School Accounting Manual, it just kind of describes the difference between, and I think this is helpful if you're like a program and fiscal people trying to talk to each other, and there's some vocabulary issues. That certainly I found it helpful, because it talks about the difference between accounting procedures for obligation versus federal reporting requirements. And it indicates that the obligation period may allow federal funds to be claimed for a current year if they meet the obligation timeline that we just talked about. But if for fiscal reporting, you're reporting them in the current year. So it kind of looks different as to the way accounting keeps their books, but for federal purposes, obligations follow the Education Department regulations that we just looked at. Now, all that sounds good, I obligated, but here is that you have 90 days from the time of that obligation to liquidate those funds. So at the end of the grant period, you may say, oh, I got a contract and so I obligated the funds by September 30th. Now you have 90 days to pay the bill. Okay, so the money's got to go out the door within 90 days. So that gives you basically till the end of December for most federal awards to get that money actually spent. So that's a 90-day liquidation period. So just knowing that might be helpful as you come to the close of some of these grants. All right, we're all done with 1920, 2021. And these funds have been available since July 1, 2020. And currently they are scheduled to expire on September 30th, 2022. There is no waiver at this point for these funds. So these funds will also expire next September. So these are some to keep your eye on. The first page is your Title I carryover page. And Title I is the only ESSA program that has a carryover limit. All your other ESSA funds, you can keep them for the full 27 months, or if you get a waiver, even longer. But Title I has a carryover limitation. So 85% of your Title I funds have to be spent in the first year of the grant. And keep in mind, this is based on the federal year, so the federal fiscal year. So you have 15 months actually to spend those funds from July 1, when you get them, to September 30th of the following year. All right, so that's how long you have to spend 85% of the funds. Now, the state agency, which in our case is CDE, is able to waive that carryover limit, but they can only do it once every 3 years. However, again, this is where waivers do apply to 2021. In September of 2021, again, last minute, okay, we got a waiver from U.S. Department of Education that allows CDE to approve waivers of the 15% carryover limit more than once every 3 years. So what that essentially means is if you got a waiver in the last couple of years, you could still apply this year. So this is what we got for 2021. So this is where you're going to report it. And you still have to request the waiver, though. You don't automatically get it. And as noted here, if you're under $50,000, if you receive less than that of Title I, the carryover limit doesn't apply to you, so you're good to go. So you're going to report expenditures through September 30th, 2021, and if that exceeds 15%, then the box at the bottom is going to pop up, and that's where you need to apply for the waiver. And in that box is where you need to provide a justification that the funds it's reasonable and necessary for you to carry those funds over, and how you're going to spend them. So if you are under 15%, you'll stop before the box won't even show up. If you're over 15%, then you're going to have to fill in the box. In the past couple of years, there have been typically these waivers just kind of went through, we wrote them, and we never heard, they were always approved. You'll get notification from CDE when it's approved. It's not automatic. But the last 2 years, since we've had these waivers allowing additional CDE to offer these for more than 3 years, we've had a number of them coming back to districts saying they weren't approved and they had to go back and fix them. So on the next page, you'll see some links that are helpful, and I think they're relatively new, and I found them very helpful. They've developed 2 websites to help LEAs through this process. So if you do need a waiver, these are good to check out. The first just tells you about carryover and waiver requirements. The second one goes into the criteria for a request. So this is worth looking at if you have to write a waiver. What do they want to see in those waivers? And we kind of summarize them on the next couple pages. Just that first of all, they're saying before you allocate the funds, you need to make sure all your reservations, your required reservations, were fully funded. So essentially that's parent engagement, equitable services, homeless. Did you meet your requirements for the funds you reserved? If you reserved funds, say for parent engagement, but you didn't spend the full, the 1% reservation, if you didn't spend it all, then you have to carry those funds over specifically for parent engagement. So number one, did you meet all your obligations for any required reservations? And remember, funds, those funds for reservations, they can be retained. You'll see the term, they can be retained for LEA-wide services, but keep in mind those are only for Title I schools. So you can reserve, the funds you reserve are only for Title I schools. All right, contact CD, we have here's a catch that we got, and we just want to alert you to this, and we're trying to get an answer to it. Okay, they're saying you can have a choice when you're determining how to allocate the carryover. Okay, first of all, did you fund all your reservations? But secondly, they said you can retain some or all of the remaining carryover funds at the LEA level, and that would be for district activities at Title I schools. Okay, so, or you can allocate some or more, all of it to your, back to your schools. So you have a choice of how you deal with carryover. Use it for district reservation, allocate it back to school sites. However, and this is where some of you will pick up on the catch here, it says the LEA may only report the amount of allowable up to 15% carryover funds allocated to eligible schools in the carryover column on the school allocation page. We'll see that page in a minute. But what if you, so the question we asked CD is, what if your carryover is over 15% and you want to allocate that to your schools? Then when you have an FPM, they're going to ask you to show that your school budget matches your Con App. And in this case, it wouldn't. So that question is pending. And as soon as we haven't gotten an answer, so they're working on it. But as soon as we get an answer to that, we'll let you know, because that's certainly a conundrum for those of you who may have carryover who are looking at, and keep in mind, sometimes FPM is looking at the prior year. So anyway, just something to put on your radar there. So that's the first bit for carryover. Also, you have to, when you're requesting it, you have to have that justification, and the justification needs to include why you have the excess carryover, what were the obstacles you faced in spending the funds, and a description of how you plan to spend or allocate the excess carryover funds. So what are you going to do, and how are you going to spend it? By the way, you have 1,700 characters to do all this. So, but that's what is the criteria. And they also articulate the requirements for equitable services on the next slide, which I thought was helpful, because that's always been in question. And were the funds allocated for specific activities? You need to describe how this had to do with the reservations. The next slide, those was referring to for equitable services. What the guidance says is that if funds are carried over for equitable services, so say you had a pot of money reserved for your equitable services for private schools, and you didn't spend all of that money that was reserved, then they give you 3 things that might occur there. First, you can use the funds to provide services to a particular school. That's the first thing you should do. So, you know, St. Joseph's private school didn't get this much, so you give them that much of the services. If that private school, though, says they have no further need for services, you could use those funds for other private schools that you're serving. And then finally, if no private school is interested in services using those funds, then they can be used for services within the LEA. So just some things to keep in mind if you have carryover, what you have to keep in mind in what you have to write to. Okay. The other thing, one more, they're asking you for any money that you send back to schools, you have to assure that that the expenditures will align with the school plan, and that they're going to be, the funds will be allocated to eligible schools. So based on your ranking this year. So all of that for the waiver. So they're asking a lot more for your waiver explanation in 1,700 words. So, well, right. All right, the next one. So that's the carryover, and this is what it looks like if you didn't, if you're under 15%, then this is the page that'll show up. You don't have anything to fill out. You're just reporting the money, and you're done. Okay. All right, we're on to Title III. Let me see, Title III, English Learner. All right, 2021. Again, it's pretty similar to what you did before. You're reporting from July 1st through September of 2020 to September 30th, 2021. They include your allocation, transfers in. There's also something on some of them called a repayment of funds. I don't know if anyone's ever had that, but that's if you had to pay something back to CDE. And the same indirect cost and admin indirect costs, you can apply the full amount, but administrative costs, that's why they're reported separately, but you still have 2% restriction on direct administrative costs. Title III is very tight to about direct administrative costs. Title III next should be immigrant, and exactly the same as what we've had in the past. Same reporting period as EL. The only difference is you get a warning, not an error for the 2% cap. So Title IV, we haven't seen a lot of Title IV before in the application. So this is a 2021, and you'll see it looks different from the other data collections, because first it includes transfers in and out. Okay, so you have Title IV, you can transfer funds into it from Title II or out of it to other programs. So there's two options for Title IV. And I believe there was a lot of transferring out of Title IV in the past few years. So you might see something show up there. In this case, which is different, the expenditures are reported by those required categories for funding. If you recall, Title IV had those areas that you could spend the funds on. And there was that well-rounded education, and then the safe and healthy students, and then the effective use of technology. So the budget, the expenditures need to be reported within those categories. Keep in mind, for LEAs that receive $30,000 or more in Title IV funds, you had that requirement that at least 20% of the funds had to be spent on well-rounded education and 20% on healthy students, and then an amount that was not specified on the effective use of technology with some limits on hardware costs. None of that is picked up here in terms of your reporting, but it is a public document, so you want to make sure that what you report here it fits in with those percentages. An error message will appear if administrative costs and indirect costs exceed 15%. So it's interesting, this Title IV has a 2% direct administrative cost cap, but they're only giving you an error message for the two together exceeding 15%. All right. How are we doing? Adrian, we were going to take a break, but I'm not sure we have time.
Yeah, I'm not sure we're going to have time. It's 4:18 right now.
Well, these are tough people, so we'll just bust on through. Okay.
Okay. Did you want questions or just keep going because we're limited on time?
Yeah, maybe we ought to get through and then we'll take any, because I don't want to hold people up because we have 9 minutes to get through what. All right.
Okay.
To get through 21, 22, which is the biggest part of it. All right, 21, 22, Title V, most of this, it won't apply to most of you because Title V is for small rural districts and that are low income, and the funds can be used for any ESSA program or for parent involvement. And this is a form to show if you didn't, top one, if you didn't spend any funds, and the bottom one, you have to report what you spent them for. But most of you don't get Title V. It's basically a flexibility, but you don't get that one. So that's one to quit. Oh, that was the last one for the last one. All right, next 21. Now we're on to 21, 22. And the first form here is title transferability. You've been hearing all about that. We keep talking about transferability, and here it is. All right, federal transferability is allowed under Title V, and it allows you to transfer funds out of Title II or Title IV into either Title II and Title IV. You can transfer among those, between those programs, or you can transfer either of those funds into any of the other programs listed, and that's pretty much Title I, II, III, EL and Immigrant, and I believe Part D also. But any of those programs listed is where you can transfer funds. So this is and you saw transfers show up in other collections. This is where you identify the transfers that would then pop over into other collections. All right, so the next slide just tells you a little bit about, this is the first, it's not the same, what we just talked about, that Title V Part B rural program, this is totally different. But you can transfer up to 100% of the funds. But the important thing to remember, and again, you can't transfer out of Title I or Title III. You can only put into it. But even if you transfer the funds out of a program, you're still responsible for the requirements of the program as a condition of the receipt of funds. And some people found this the hard way. So you transfer all your Title IV funds out of Title IV, you still have to provide all the services under Title IV with district funds. So you're, because you took the money, essentially, you have to meet the requirements. So just keep that in mind when you transfer, that you still have to. And some of you are doing a lot of this already. You say, wow, we're doing a lot of these things that are under some Title II or IV. And so you're okay with transferring it, but just be aware you need to document that. All right, the next are your nonprofit. Oh my gosh, they're not. These are always a challenging pages. Private schools are. These are all the applicable to equitable services, and just keep in mind, if you need to make changes on some of these pages, you may need to go back to the spring submission, because that's where you did you indicated that you consulted with the schools, and if the schools are on that list, they're going to pop over to this data collection. So in some cases, that's why it's important to look at the last one. So just know that that's a possibility if you have a change. Only schools with a written affirmation are on file. So if a school isn't showing up, it could be that they didn't submit their affirmation to CDE and they need to do that. It only includes nonprofit private schools. And what warning they put on all the pages is that when they submit their affidavits, CDE does not verify their numbers, and they use their enrollment numbers. That's what they're pre-populating for you, and they're saying LEAs are expected to verify your enrollment numbers, that what they put there may or may not be correct, and that's not as important for Title I, but it is for those programs like Title II and IV, where you're using total enrollment for funding. So, and then you have to maintain your written affirmation. So just a few things to think about for private schools. The first page is the report of low income accounts for participating private schools. And this is only applicable if you get Title I funds. For large districts, there's a downloadable file you can use. So if that's helpful to you, there's instructions about that. Enrollment numbers, again, they're based on the private school affidavit. and you're going to enter the low income count based on what you determined in consultation you're using for your low income count for your private schools. If you previously certified the allocations page, if you jumped ahead and certified it, you're going to have a problem because you have to certify it after this. This is one of those where you have to do it in order. But again, it's Title I. So this is just, you're just going to put those low income numbers in, and just the last column, if you added a school, that would be if you had a school outside your district boundaries you would add them in that particular spot. So the next page is also for private schools, and the purpose of this page is to collect the data on your low income count. No, I'm sorry. This is your public school counts. I'm sorry. It connects to the private school page. That's why I went. This is for your Title I ranking, and first of all, you're going to identify your ranking options. So up at the top of the page, you're going to have to check how you want to have your schools ranked. Do you want to do them district-wide? And that says within LEA, that means district-wide. Okay, so you're going to check that if you want them just to put all your schools in order. If you want them to put them by grade span, then there's a place to check for that. Whatever you check here is going to pop up on a subsequent page. So decide how you want your schools, how you want to rank your schools. Then you're going to select your low income measure. There's a drop-down menu. Most people use free and reduced price meals. If you use a composite, you're going to have to write a justification, but most people use free and reduced meals. The enrollment of your low income numbers are pre-populated. Both your enrollment and your low income numbers, they're pre-populated from the prior year's CalPADs, not this fall, but the prior years. And that's because your Title I schools should have been ranked and funded at the beginning of the year, okay? Not now. This isn't when you fund your schools. So you wouldn't have had any other numbers other than prior year numbers in June or July of last year. So that's why they pre-populate it, presuming you ranked your schools in July and got the money out to them. But you can choose, if you choose to use updated numbers, you can enter them manually. So you can change those numbers, you have to enter them manually. And you'll see the grade span groups. There's a link on the CDE page to how they group the schools. In most cases, it's elementary, middle, high school, but some districts have funny grade span configurations, and so that there's a list of that on the CDE website, so you can get that. Okay. They're saying if information on this page, if something's missing for a school, just try reloading the page. And they said for this particular page, that might work and get your school, get everything done. Otherwise, contact the CARS support desk. Okay, the next page is the page that I'm going to refer you to the instructions for, because last year we had arrows and things going back and forth, and I think it was more confusing than helpful. I think what you really need to do for this page, because there's very detailed instructions with 3 options for completing it. One requires navigating between pages, and I think you need to be doing it while you're reading it rather than trying to memorize it. So it's best you select one of the options and follow the instructions as you work on the pages. What you'll need to get to here are total public and private school low-income students, resulting in a percentage for your equitable services. And many of those calculations are done for you, but getting those numbers requires looking at your public school counts, your private school counts, and there's lots of, and I think a couple of you found a workaround for this page last year, but the instructions give you 3 ways to get to this, so we won't go into that today. Anyway, based on what you enter, the system's going to calculate a dollar amount and for equitable services and the minimum requirement for parent engagement for your private schools. And this can be edited to reflect a higher amount, but you have to have the minimum. And then the district can include administrative and indirect costs not to exceed 15%. So you can apply indirect and admin to your private school services. Okay. All right, next is allocations and reservations. Title 1, allocation and reservations. Okay. This form, it has to be certified, excuse me, after you do the Title I Equitable Services reservation page. So this is one of those that has to be done in order. The displayed data includes your Title I allocations, any funds transferred in, and the amount on the private school equitable services reservation page. So whatever number showed up there is going to pop over here as what you have to reserve. If you have $500,000 or more in Title I, automatically they're going to calculate the 1% parent engagement reservation. And then there's a separate line that will calculate 90% of that for school sites. So that's calculated. Again, you can raise it, but you can't lower it. The form includes reservations. This form includes reservations for neglected and delinquent youth. There's been a lot of confusion on serving those kiddos that are in institutions. And so this year, you will get the form that's most appropriate to your district, is my understanding. So if this is applicable to you, then you'll get this form. If it's not, you'll get another form that just doesn't have the N&D reservation on it. So you won't have to worry about that. Authorized reservations are those that are, there's a section that says authorized, they're not required. So you have required reservations and authorized, and they include that you can reserve funds for students who are still in schools based on public school choice. Seems like that should be over pretty soon now. And there's also your indirect and administrative costs are under authorized reservations. But again, reservations can only be used at Title I funded schools. Well, I think that's it for that one. All right. Homeless, keep in mind you have to reserve funds for homeless youth, and they can be for homeless students who aren't at your Title I schools. But these are just some options of what you might do, how you might determine that. There is no amount that you have to reserve that's specified, but you do have to reserve something for those students, or it will be questioned. So you can, have it based on numbers of homeless kids. You can get, you can multiply your homeless kids by your Title I per pupil allocation. You can reserve funds. If you have a McKinney-Vento, you might use that. You just need to have some kind of basis for determining how you're going to reserve funds for private school. And even if you don't currently have any homeless, not private homeless students, keep in mind the nature of homelessness is they may be there tomorrow. So you have to reserve funds for them. All right, next page is just a picture of that same page we just looked at, but for LEAs that don't have to reserve funds for neglected and delinquent, and I think that's a lot of you. Okay, we're on to Title I school allocations. All right, this is used to allocate your funds to schools, and this is the one most districts are going to use. There's a separate one if you're a small district or a single school district, small meaning under certain numbers. It reflects the low income counts from the previous page. You did that school student counts page. It also reflects the decisions you made about your ranking options. So it's going to rank them based on what you said on the previous page. You want them district-wide or you want them grade span grouped. All right. It's pre-populated, includes the names, the codes of the school, grade spans, enrollment, the low income percentage, okay, again from prior year CalPADS. The system is going to flag any school as eligible if the school's low income count is equal to or greater than the district-wide average for poverty. So any school is eligible if it's at or above the district poverty level. And it will also flag any high schools that are over 50% poverty, because that was a new allowability. So they can be eligible at 50%. Schools are ranked in order. It'll rank the schools for you. If it's, schools are also flagged as required to be served if they're over 75% poverty. You have to serve those schools. And so then they'll rank the schools in order based on what you said on the prior page by grade span or district-wide. You then indicate your per pupil funding amount for each school, and it can vary. The per pupil amount can vary. It doesn't have to be the same for all your schools, but a lower ranked school cannot receive a higher per pupil amount than a higher poverty school. You have to fund your higher poverty schools the same or more than your lower poverty schools. The funding must be, and I'm going to say this really loud because we see this happening as a problem. The schools, the funding amounts have to be, and this is right from the instructions, sufficient to provide a level of funding to school budgets to implement an effective program. What we see, I'm sure there are principals, I want some of that money. And so what we see is Title I money being sprinkled all over the district like salt, as opposed to ensuring that there's enough there for an effective program. So keep in mind, that's a requirement in the instructions. So is it reasonable? Can you do anything with that amount of money? And if the LEA wants to mark a school that's marked ineligible, okay, so you may have a school that's not eligible and you want to fund it, you can do that, but only if it uses one of the discretion codes that's listed there. So it's below the district average, but it's above 35%. Okay, so you can't fund a school below 35%. A desegregation waiver, most don't have that. Grandfather provision. If a school falls out of eligibility, you can keep them for 1 year only, with a grandfather provision. You can also use a feeder pattern, and that is for schools that are high schools usually, or middle schools where maybe your free and reduced numbers drop off. You can use a feeder pattern from your elementary or middle schools. Okay. Okay, next is small schools. Okay, this is what you'll get if you're a small school, and those are, or if those are schools, a single school district, or if you have less than 1,000, you don't have to rank. So you'll just get this page where you list the amounts there. We are over, and so we won't go over. We'll leave the ranking rules for you on the next couple pages, but just to know there are requirements, and there's a link there on the CDE website for how to rank your schools and what the requirements are. You have to rank them by federal requirements. And so take a look at that website. You have to fund them if they're over 75% poverty, and then you rank after that. So keep that in mind. Those need to. And only schools that are above the district poverty rate are going to be indicated as eligible unless they meet one of the exceptions. All right. And we talked about some of the others. You can't skip schools. You got to go in rank order. All right. So let's skip over to the next page. Oh, well, the next page is a sample. Let's see. One more. This is just kind of an example of some schools. So you see Wilson School at the top. It's marked as eligible and required to be served, and that's because it's over 75% poverty. So you see that first one is going to say yes, it's eligible, and yes, you have to serve it. So it's ranked number 1. Sycamore School, it's got a really high poverty rate, but it's right at 75. It's not over. So yes, it's eligible, but no, it doesn't have to be funded, but probably will. But this is a district, very high poverty district. McKinley School, the next one, it's at 70%. We got a district here with a 72% free, low income average. So they're actually below the district average. You could fund that school with an exception though, because they're above 35%. So if they fall in the rank and you have enough money, you could spend them. And the two Gridley and Esperanza high schools are both marked as eligible, even though they're below the district average. And that's because the exception for high schools, you can fund high schools and put them above others at 50%. So that's kind of a 1, 2, 3 on, it's our ranking test. All right. The next is what was asked about the school-wide program. This is where you identify any school operating a school-wide program. Schools that were previously identified, they're included here. Any new school that's approved that has to be added if they have an approved school-wide plan. Schools with 40% poverty or more can operate a school-wide program if they have a board-approved plan that addresses all the Title I requirements. So those schools can be added. However, there is a waiver that you can get if you have a school below 40%, and it does not meet, it doesn't meet the 40% poverty threshold. You can still fund that. You can still have that school operating a school-wide program with a local waiver. And let me see. Yeah, when you get your prior schools that were already approved, keep the original board date, but they suggest you update your low income percentage. And then any board approval date for new schools has to be before June 30th. So if you're going to have a school approved by your local board as a school-wide program before June 30th, you can add them to this report. For schools, if a school drops below 40% poverty and it's school-wide, or if you have a new school that is below 40% poverty that meets one of these criteria, your local board can provide a waiver, and it's just a local waiver, no form, no nothing, just document the waiver to allow them to operate a school-wide program. First, they need to have the waiver approved, and then they have to go and develop the plan. So the waiver date needs to precede the actual plan date. All right, so you can look at all the rest of that on the waivers. Part D, again, this is county offices. This is just going to be your budget for allocations and reservations. Yeah, so this is a pretty simple form. You're just putting a very basic budget in here. Indirect costs and indirect costs and admin. Again, warning 15%. Okay. All right. And Title II, this is going to be, had the wrong, where's Title II? Where's Title II? There it is. Okay, Title II. So this is just identifying your private schools that you're serving with Title II. And it's just indicating which schools are participating in Title II and III. So 2 and 3, that's why I was confused. They're on the same page. So you indicate which of them are they participating in. So that's pretty much all for this page. You're just which schools participate. And you can add schools, but you have to go back. This is when I said you have to go back to that spring consultation page to add any schools to this page. And the rest, I think, are budgets. The next is Title III, nonprofit. Title III EL, okay. Allocations and reservations, it's just a very basic budget. Your budget amount by allowable program areas here, and a same error message on the cap. So this is your 21-22 budgeted amounts for your EL program. Okay, Title III. And you're going to have the same Title III allocations and reservations. Looks like the same page. EL allocations. Oh, this one includes your equitable services reservation, I believe. Yeah. All right, let's Title III has more expenditure reports than most programs because Title III funds often end up not getting spent. I think that's the reason. So they'll require a 6-month report for Title III, EL, and immigrant. So this is only going to be from July 1 of this year through December 30th. So basically, you're reporting your expenditures for that period. You still have time to spend those funds, but they want to know, are you on target for spending your Title III funds? So that's all this page is, just a report of expenditures to date for this year's funds. And I believe the next one is the same thing for immigrant. Exactly, same thing for immigrant funds, reporting for this year's funds from July 1 through December 30th. All right. And again, Title 1, Title 3, your expenditure report. Again, this is no breakdown. Oh, no green comment about expenditure, but oh yes, that's what I wanted to say on this one. You're going to notice, and I don't know why this is there, but on, I think all the Title III pages, there's a note, and it's an error message that your benefit costs, you can't have benefit costs if you have 0 for salaries. And I don't know why that's there or why it's only Title III, but I just thought we needed to warn you that that keeps popping up on the Title III page. So just keep that in mind. You know, if you don't have salaries, you can't have benefit costs. So I don't know why that's happening, but somebody must be doing something that's triggering that. So just a note there. All right, next one is Title IV, I think, and this is just indicating any of your private schools that are participating in Title IV. Remember, Title IV is only schools within your district boundaries. Same for Title II and III, so Title I is the only one different. Just indicate if they're participating in the program. And next is a Title IV allocation page. And again, anything you indicated on that transferability report will pop in here. In this case, there's an error message of a 2% cap on administrative costs and only direct admin. So 2% cap for Title IV. Okay, and then you have to include your equitable services. And I think last is the consolidated administrative costs, and this always comes at the end, and hardly anybody seems to do this, but you do have the ability to consolidate all your title funds for administrative costs. If all you do is work on federal programs, this might be of value to you, but check with your fiscal office. Usually the barrier is the fiscal office because they have to put all that money back. You don't have to time, you only have to do, you'd be a single cost objective. If that's all you do, you could count this and you could do semi-annual reporting, but then your business office has to transfer back all those funds by the end of the year. So usually the business office says no on this one, but check with them if that sounds, and for most of you, you do more than just federal programs. So it's not as helpful as it might be. But the next 2 slides tell you a little bit more about it. So read up on it if you think that might be of value to you. And thank you to those of you who hung in. Remember to certify by March 11th. We're here for questions, and we will follow up with any questions in the chat unless there are some burning ones you saw. Adrian.
It's kind of hard to determine. There's quite a few, so I think
they're all burning. All right,
yeah,
I guess we'll get it out to you in writing. I guess that's our homework. Okay, we will get it out to all the attendees and to the full list in writing right away. We promise. This won't be on top of our list. All right, so sorry to keep you late, and but thank you for hanging in, and happy con-apping. All right. And our contact information on the next slide. Contact us anytime. These are good questions.